Hi, and welcome back to Crypto Info Depot, where we talk about all things crypto and beyond. All right, let's take a quick look at BTC. Today was the Federal Open Market Committee meeting, FOMC. It, interestingly, did not produce very much in the way of price action. Everybody was waiting for this meeting today, and we were looking for something that was either hawkish or dovish. Turned out to be hawkish, but it looks like, as it stands right now, that price, the hawkish price, was priced into the market because we don't see a tremendous pop one way or the other. Now, if we zoom in here, we'll see this wick up. That is at 11 o'clock Eastern Pacific time, and that is right when the announcement came out, and we saw initially what had been the minutes of the meeting. But then right after that, it started tanking and going down, and now it's going back up a little bit. But what we see is a range here of 38,000, 36,000, nothing really spectacular. From here, we had, call it 33,000 to 37,000. That's a big increase, all waiting for the Fed to make its decision and tell us what was going to happen. Remember, we have another meeting in 6 weeks, so pay attention. But it's really quite interesting because if we zoom out, let's go to the daily chart here. We zoom out and we see all of this downtrend here as a result of learning in the beginning of the year, the end of last year, that the Fed was going to start increasing interest rates and reducing the purchasing of its bonds and then eventually selling bonds. So just by saying that, it caused all of this to drop. Now that they've actually announced that they're going to do it, it really hasn't had that much of an effect on the market today. But let's take a look at something. Here's what Jerome Powell says today, and frankly, it's pretty doggone hawkish, and I'm surprised that the market hasn't dropped more than what it did today. Quantitative easing will be completed in March. Well, we kind of expected that. The first rate hike will begin in March. We expected that too. They said that the rate hikes will be their main tool for fighting inflation. Keep that in mind because we're going to touch on that again here in a second. Powell also said that asset prices are too elevated. He said that there's quite a bit of room to raise rates without hurting employment. Remember, that's their main tool to lower inflation, and he's saying that they got lots of room to do it without hurting employment. He also says that wages are rising at the fastest pace in years, and that in the past, hikes were 25 basis points, but he left it open to be able to do higher rate hikes, potentially 50 basis points. He said that inflation will likely stay elevated, again, putting us on notice that they're prepared to go after it hard and heavy, and he expects slowed growth. He also expects to begin reducing the balance sheet after rate hikes go into effect. Now keep this in mind. They will have stopped buying bonds between now and March, and then they're immediately going to begin the rate hikes beginning in March. And then right after that, according to Goldman Sachs, who predicts that they're going to be putting pressure on inflation at every FOMC meeting, predicts that they're going to start selling $100 billion a month in bonds right after they begin raising rates. So this is a lot of pressure to remove cash out of the market. Let's take a look at this chart here. Now what I've done is I've marked all of the FOMC meeting for the last roughly year, 2 years, something like that. In December 16th of 2020, that's when they had this meeting here, and they had announced a reduction of interest rates. And so we see the market going up. Also, of course, let's zoom out just a little bit here. I made note in my last two videos that this is where the stimulus CARES package began. We had some FOMC meetings here, and they were pushing money into the market at that point. But all the money from the stimulus CARES package now has begun making it into the market. And December 16th, we got a meeting, and the price of Bitcoin goes up. We have another meeting on January 27th, and again, the price of Bitcoin goes up. But then we have a meeting on March 17th, and Bitcoin drops after that meeting. Follows to an all-time high, drops again, and then we have another FOMC meeting, and now, for the second time in a row, shortly after, within about a week, the markets fall. Here's another FOMC, and again, Bitcoin falls. Here's another FOMC in July 28th of last year. Again, the market goes down almost immediately, but then it goes up again. Another FOMC on September 22nd. Again, market goes down almost immediately, but this time it goes up. Keep in mind, they're still putting money into the economy. They're still printing. The printing presses are running like crazy. And now the FOMC meeting on November 3rd, for the first time, they indicate that it's time to reel back the printing presses. Now we see that the price of Bitcoin goes down. We have another FOMC meeting on December 15th where they confirm beyond a shadow of a doubt when they're going to be doing this. Again, price goes down like crazy. And here we are, January 26th, with today's FOMC meeting. And what do we see? Not much. This is kind of interesting. Now, in the previous FOMC meetings, it takes about a week for the price to bottom out. It takes about a week, in this case 3 days, for the price to bottom out. In this case, it's about 3 days to bottom out. So we see right now, initially, the price spiked a little bit, but even right now, as I record this video, we can see that the price is going down a bit. So if it follows suit, we can expect a couple of days, a week or so of downward trend. But here's the other thing. Right now, we are inside of a long-term downward trend, and frankly, there's nothing that I can see anyway that's holding it up. There really isn't any reason for it to come up. In fact, as I see it, there's every reason for it to keep coming down. Money's being taken out of the economy. All of this upside that we had this last 2 years started when the Fed started putting money into it. Well, if they're taking money out of it, how low are we going to go? I don't see anything at all right now that is propping this up. Now, we've got a downward trend, and in fact, right now, it's looking like it might start to break that downward trend. Okay, so there's the bad news. Possibly, we can get this thing to go all the way up to here, and then retest both the support line, retest the white support line and the upper resistance line, and maybe we can get it to go up. If it goes up, it'll probably bounce at about $40,000 because we have a fair amount of resistance at $40,000. Maybe after that, it bounces and rides in here. Maybe it goes up. Maybe it bounces and goes back down to here. But there's just not a lot of upward pressure right now, and there's going to be even less over the course of the next 1 to 2 years as the Fed takes money out of the economy. So this means you have to keep capital available on the sidelines for great opportunities that come to you. Patience will be critical. So that is it for my recording today. If you like the content that I provide to you and you'd like more of it, please do hit the like button. It helps me out a lot, and subscribe, and you'll get notifications. I'm trying to do this every single day. So again, hit subscribe and the like button, and we'll talk to you in the next recording. Bye.